All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in here this morning. Happy Wednesday to you. Let's take a look and see what the markets are doing. This is the halfway point. We want to bring up something to show you what we've got going on. Remember yesterday, WASDE report, less corn than we thought we had. This market's still a little buoyant. 1.25 cents better bid in March. 4.50 last. A penny off the highs. We're 2 cents better in May. 4.57 last there. Just 0.75% off the high there. So that continues yesterday's gains. That's corn. How about beans? Because yesterday corn was dragging them all up, and it still is again today. Jan's up 4.25 cents to 9.99. We're at 10.05 in March. That's up 4.75 cents. And just a penny and a half off the highs. May, that's 10.14. How about that? 4.75 cents better there. So almost 5 cents better bid across the board when we talk about beans. How about Chicago wheat? We dragging that up too? Here we are. A lot of green on the screen here today. 5.25 cents better bid on March wheat. That's Chicago wheat. 5.67 last, 2.25 cents off the high. May is up 6 cents, 5.76.5. All right, so that's a May. Well, that's a Chicago wheat board, March and May. Let's move on from Chicago to Kansas City and take a look at the hard red. That too is higher in deference. 3.5 cents better bid in March of 5.69 last there. Well, we got a May board up 3.75 cents to 5.76 3/4. All right, so everything looking a little bit better here as we speak. Spring wheat, Minneapolis, that too is higher, 3.25 cents better bid on March. March spring wheat is up 6.09 last. We got May up to 6.17 last. That's up 3.5 cents there. Let's go to the cotton, and we'll get to our guest analyst. Cotton is going to be up 34 points here today, so we're all green across the screen so far today. The March cotton price, $69.82. You've been waiting for that. Well off the lows of the day, and we're actually on the high. How about that? I haven't seen that in a while. Let's bring in our next guest analyst, Mr. Scott Wilson. He's with CHS, and he's in Bloomington, Illinois. Scott, thanks for being on.
Yeah, thanks, Scott.
Okay, I don't know. I'm going to say this, and then you take it apart. But less corn yesterday. Corn rallied. I think it drug a lot of other stuff up with it. Maybe a little bit of that happening here today. I don't see any headlines. At least I didn't earlier this morning.
Yeah, so you could be right. We did see some bullishness, though. We did see the Biden administration announce stricter sanctions on Russian crude exports. And then we also saw a Ukrainian missile strike a Russian oil port, which caused a fire at the facility. Still don't know the extent of the damage there, but whenever we do see energy infrastructure damaged, we do typically see a little bit of strength in the market, though. And then, yeah, like you said, prices still elevated despite a bearish EIA inventory report showed a small draw in crude stocks, and then large builds, though, in gasoline and diesel inventory both.
All right, Scott, you've committed one error so far today, and that's when you have a grease board like that behind you, you have to have a lot of really interesting things and to-do lists. And
I actually threw a little fake chart on there for you because last time it was blank.
Well, I would at least give me some X's and O's about football or something. We just can't have it be blank like that. How much are we going to be looking for the South American weather here? I mean, there's not a lot of data points now until we get, say, January. So is that going to be kind of the main focus?
Yeah, for energies, I think, we're kind of looking what's going on just with current fundamentals. Obviously, a lot of conflicting fundamentals out there. Since last we spoke, I actually looked a few minutes ago. Prices have changed all of 10 cents for crude futures since we last spoke on November 20th. So, yeah, the fundamentals just holding stuff sideways. And OPEC actually went out. They revised their oil demand forecast lower for the 5th consecutive time. So, yeah, that demand picture is still not looking great. They're the most bullish between them, EIA, and the IEA. But everybody's still revising those demand pictures down. So that's something to look at. But if we do look at where we're at currently, rack diesel prices at very appealing levels in the Chicago, Gulf, and group markets. The group market definitely the most appealing, near the cheapest level since 2021. So, hey, it looks like potentially a good opportunity to get your tanks filled for diesel.
Yeah, I mean, if we see what the next president wants to do, maybe some of those prices can continue lower. I know we are producing more than we ever have before, but apparently that's not enough. We can do more and bring these prices down. We'll see. But interesting to see that crude oil is spiking here this morning. We're close to the highs of the day. We'll see if we can hang on to that. But it seems like every time we get to 70, Scott, something happens, we get slapped back down. And that's where we're at right now as we speak. All right, appreciate you coming on. Thank you very much, Scott Wilson, coming to us from Bloomington, Illinois. He's with CHS. We're going to go away. We're going to pay some bills. Things are expensive, too, here. We got to get those done. We're going to come right back after that and talk about some livestock. We'll be right back.